This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Where we want to educate you about our market, empower you to make wise decisions, and help you engage with our expert contributors. Jeff, I wanted to ask you, there's the changes in the tax laws made small business owners, we've got to rethink just about everything when it comes to our taxes, don't we?
What we need to do is push more on our business than we have previously on our personal return.
Okay.
Figure out a business reason why we have some of the personal expenses that we do. For example, we can get a deduction for self-employed health insurance.
Okay.
Throw that on our Schedule C or our partnership return, and we get to take that deduction for the health insurance that we pay for our families. With the depreciation, we need to think about the stuff, the fixed assets that we use in our business.
Right.
If we've got a good business reason why we have our car, we ought to put it in the business.
Interesting. So it's coming from a realtor who's very dependent upon his car.
Well, let's go one step further.
Right.
We get a deduction for every mile that we drive, 53.5 cents a mile.
Right.
So if we keep a log, we get that deduction.
Anything we can think of that should be considered a business expense has to be in the business and not deducted later in our personal return as a quote unquote.
Correct. You're not going to get those miscellaneous itemized deductions anymore. It has to flow through the business.
Gotcha.
In prior years on our Schedule A, there's a section down at the bottom where it's a miscellaneous itemized deduction.
Right.
Subject to 2% of your adjusted gross income. That's gone.
The cash and the accrual accounting methods and how that may impact us in terms of how we're doing our taxes and so forth.
Well, the cash basis accounting, I'll put it the best way I know how, is that you recognize income when the cash comes in your account, and you recognize an expense when the cash leaves your account.
Okay.
Accrual, you recognize income when you bill it, so you have accounts receivable, and you're paying tax on that accounts receivable, and you recognize an expense when it goes into your accounts payable. Let's suppose you prepay you prepay any expense.
Right.
Let's suppose you pay your insurance. You pay your insurance premiums for a year. You think about how much you need to deduct each month, and then you have a prepaid at the end of the year.
Gotcha.
And it's an asset versus an expense. But when you're a cash basis, it's when that cash goes out, you pick up the expense.
What do you think is going to surprise people the most when they do their taxes this year? What's the thing that's going to be, oh, I didn't see that coming?
The limitation on tax deduction on your Schedule A. If you look at Schedule A, there's a combination of three different kinds of taxes that are deductible. There's real estate taxes, personal property taxes, which are your vehicle registration fees, and the greater of state income tax or sales tax. I have a client who finished a tax return, and we recognized on his Schedule A $61,000 in those combined taxes for 2017, and he gets a deduction for that. However, in 2018, the sum of those three taxes is there's a ceiling of $10,000.
Wow.
You get a $10,000 deduction, period. So if you're paying a bunch in state income tax, you're not going to get it next year. If you have a lot of property holdings and you've been picking up property tax deduction on your Schedule A, you're not going to get it. You're just going to get the $10,000 ceiling. And that's a bit scary.
This has been Las Vegas Real Estate Now. Thanks for listening. And remember to tune in every Tuesday morning at 9 a.m. on 101.5 FM, 720 a.m. KDAWN.